All right, ready to dive into the world of Cortex.
Sounds good.
Think high-speed trading, like trying to predict if gold, oil, or the S&P 500 will jump up or down.
Yeah, that's digital options trading on Quotex.
Quick decisions, sometimes minutes, even seconds.
Definitely fast-paced, traders trying to outsmart the market. Quotex provides the tools and the runner for that.
Be on your toes. So in this deep dive, we've got research on 5 common strategies used on Quotex.
We'll unpack each one.
So you get the how, and more importantly, the why.
It's intriguing. Each strategy is like a different viewpoint on market moves.
Some technical, some more gut feeling, and market psychology.
Right.
Let's start with one that sounds like a mind game, the fake breakout strategy.
Okay, sure.
What's that about?
Exploiting, fear and greed, which often drive those impulsive traders.
Makes sense.
Imagine Bitcoin price suddenly shoots past a key level.
Okay, yeah.
Could be a real breakout, signaling an upward trend.
Uh-huh.
But sometimes it's a trap, a fake out.
Ah, I see.
To lure in those fearing they'll miss out on profits.
So they jump in thinking they're riding the wave and then...
Price reverses, drops back down.
Ouch.
Those who fell for it are left holding the bag, while traders, using the fake breakout strategy, they saw it coming.
Profited from the drop. So using the market psychology against itself.
Yeah, you could say that.
But how to tell a real breakout from a fake one? Seems risky.
It is high stakes. Traders look for subtle signs.
Like what?
Say, if trading volume is low during the breakout, red flag.
Interesting.
Suggests lack of genuine belief in the price surge.
So not just the price move, but what's behind it.
Precisely. And there are tools to help, like the MACD indicator, moving average convergence, divergence.
Okay.
Like a speedometer for the market's momentum.
So weak MACD during breakout, maybe the surge is fading, setting up for a reversal.
Yeah, you got it. Combining those clues, low volume weakening SED helps these traders spot the traps.
Okay, let's move to something more technical sounding. The indicator-based strategy, MCD, and Bollinger Bands.
All right.
Before we go further, can you explain those, simply?
Sure. Let's start with Bollinger Bands. Imagine a channel surrounding the price action of an asset. The bands widen when the market is volatile, narrow when calm, like a highway. Wide bands, more room for price to move, like cars speeding on a multi-lane highway.
Gotcha.
Narrow, price is more contained, like careful driving on a single-lane road.
So traders use these bands to guess how much the price might swing.
Exactly.
Yeah.
And combined with MACD, remember the market speedometer?
Right.
A powerful combo.
Like having 2 instruments on your dashboard, fuller picture. But how do they give actual trading signals?
Let's say price dips towards the lower Bollinger Band. Could be oversold.
Okay.
At the same time, MACD hints at momentum swinging up. That's a buy signal for someone using this strategy.
They see the price bouncing off the band and momentum turning positive.
Yeah, it gives them confidence to enter a trade.
So looking for those moments where the indicators agree, both suggesting a shift in direction?
Yes, exactly that.
But not just any buy signal, there are numbers involved.
Right, and this strategy is interesting. Research suggests a win rate of 78% using MCD and Bollinger Bands together.
Impressive. But of course, no guarantees.
No, definitely not.
Past performance doesn't guarantee future results. Risk is always there. But makes you want to learn more, for sure.
Absolutely. We'll get deeper into this and other strategies later. For now, something for visual learners, the candlestick pattern strategy with wicks. Recognizing patterns that look like, candlesticks.
I've heard of those little chart formations, reading the market's mood.
Exactly. Each candlestick shows a period, 5 minutes, an hour, whatever. The body shows the price range in that time.
Okay.
The wicks, those are the thin lines above and below the bottom.
Good.
Those are important. They can show things like indecision or rejection in the market.
Like they're whispering secrets about what's next.
You could put it that way.
And there are specific patterns with cool names. Pin bars, hammers, what are those about?
Those suggest reversals. For example, a pin bar has a long wick one way, small body.
Okay, yeah.
It means a failed attempt to move in that direction. Market tried to go one way, got pushed back.
So pin bar at the top of an uptrend, maybe the upward push is stalling, reversal coming.
You got it. And a hammer that often forms at the bottom of a downtrend.
Okay.
Suggesting buyers are stepping in, trying to hammer out a bottom.
So looking for those signs, the whispers from the wicks, and this candlestick strategy, I notice it's often used with those short-term 5-minute Quotex trades. Why is that?
Well, candlestick patterns work well in those short time frames. Even small price changes can be opportunities.
It's all about recognizing them fast and acting decisively.
Exactly.
All right, let's shift gears to a strategy that seems a bit, well, live wire. The news trading strategy. What's that about?
Okay, yeah. That one is all about using the fact that news can really shake up the market.
Big announcements, interest rates, company earnings, geopolitics.
Exactly. Prices can soar or plummet in minutes.
So, riding the waves of reaction to news sounds exciting, but also nerve-wracking. How do traders keep up?
They become news junkies, always checking economic calendars, news feeds, looking for anything that might affect the assets they trade.
Trying to predict the market's reaction and trade accordingly, hoping to catch the wave at the perfect time.
Exactly.
Yeah.
But high risk, high reward. Sometimes the market reacts unexpectedly, or the news is already priced in.
Meaning?
The market has already adjusted because it expected the announcement.
Gotcha. Not a guaranteed win, but definitely keeps you on your toes.
Okay.
Okay, last one. A strategy considered more approachable, especially for beginners.
Right.
The trend trading strategy. What's the idea there?
It's about spotting the main market trend, up, down, or sideways. Then aligning your trades with it.
Okay.
Like surfing. Wouldn't paddle out against a giant wave, right?
Nope.
You wait for one going your way and ride it.
So uptrend, you're buying, downtrend, you're selling. But how to actually spot those trends?
Traders use different tools. Trend lines, connecting important price points on a chart. Moving averages, smoothing out the price ups and downs over time. These help to visualize the trend's direction and strength.
Not just random price moves, you're looking at the bigger picture.
Precisely. The key is to ride that wave as long as it's moving clearly. But remember, markets don't always trend neatly.
Right.
Sometimes they move sideways or range. Then trend trading isn't so effective.
Gotcha. Need to be flexible. Recognize when a trend is weakening or when the market isn't trending at all.
Absolutely.
We've covered a lot, 5 different approaches on Quotex, but there's something else equally important.
Yes, definitely. Doing your homework when choosing a platform.
Okay.
Quotex has great tools, easy to use. But there's another side of the story.
Wait, what do you mean? Something we should know about Quotex.
Well, there have been some concerns about withdrawals and the regulatory oversight. Important for any trader to know.
We'll dig into those in detail in just a bit. Back again, and before we jumped away, we were talking about a big part of trading on Quotex, or anywhere really, doing your homework.
Yeah, it's easy to get caught up in new strategies thinking about profits.
Right.
But you got to take a step back, look at the platform itself, critically.
Exactly, because the best strategy won't help if the platform's unreliable, or worse, shady.
Right.
So, those concerns with Quotex, you said withdrawal issues and regulatory oversight.
Yes.
Can you expand on those?
Sure. Let's start with regulation. With financial platforms, gotta know who's watching them.
Makes sense.
Ideally, you want a platform licensed by a reputable financial authority, someone holding them accountable.
Adds a layer of protection, knowing someone's looking out for traders.
Exactly. And that's where some questions come up with Quotex.
Okay.
They're new, and their regulation isn't as clear as some older platforms.
So before putting in any money, traders should check Quotex's regulatory standing.
Absolutely. See what's out there, understand what it means.
Knowledge is power, especially here.
For sure. Now, about those withdrawal worries. This is where it gets tricky. Some traders have reported delays or problems getting their money out of Quotex.
Oh, wow. That's a big red flag. I bet that's frustrating.
You're right, very frustrating. That's why research before committing funds is crucial.
Yeah.
Read reviews from other traders, see their experiences, pay attention if anyone mentions withdrawal problems.
Like checking hotel reviews before booking. See if there are any nasty surprises.
Exactly. And in trading, those surprises can cost you money.
Right.
So those reviews are valuable intel. Look for patterns. What are people saying about withdrawals? Then make your decision.
Okay, so regulatory clarity and smooth withdrawals, 2 big things to watch. Anything else for due diligence on Quotex?
Yeah, don't ignore the platform's terms and conditions.
Mm-hmm.
Easy to skim those, but they've got important details. Fees, withdrawal policies, all sorts of rules that could affect you.
I admit I usually skip those, but I'm realizing they can be really informative.
Definitely, good and bad. They might reveal hidden fees, withdrawal limits, restrictions you don't want later. So understand those terms first.
Okay, so to recap due diligence on Quotex.
Yeah.
First, the regulatory status. Is there a solid authority overseeing them?
Right.
Second, user reviews. What's their reputation, especially for withdrawals?
Yep.
Third, don't ignore those terms and conditions. Might save you trouble later.
You got it. Those are the steps for an informed decision. Remember, choosing a platform is as important as your trading strategy, part of managing risk.
Absolutely. Solid ground before even starting to trade. We've spent time on this, but it's vital for anyone thinking about Quotex.
I agree. It's easy to get swept up in the excitement, but approach it with a clear head and a healthy bit of skepticism.
Okay, back to the strategies. We've got 5 approaches to Quotex, each with its own tools and methods.
Right.
But for someone brand new to all this, which would you recommend starting?
Good question. And the answer, like a lot in trading, is it depends.
Okay.
Pros and cons to each. What works for one person might not for another. Comes down to trading style, how much risk you're comfortable with, even personality.
Not one size fits all. Finding the right match for you.
Exactly. But if I had to pick a starting point for a beginner,
Yeah.
probably the trend trading strategy.
Interesting. Why that one?
A few reasons. First, it's simple to grasp, aligning trades with the market's general direction. Pretty intuitive.
Makes sense.
Second, it uses tools like trend lines, moving averages, easy to understand even for beginners.
Uh-huh.
Third, it encourages discipline, spotting clear trends, not chasing random price jumps.
Good foundation, teaching you to see the big picture, be patient, avoid impulsive moves.
You got it.
Yeah.
Helps develop a feel for the market's rhythm, its flow. Valuable no matter what strategy you end up focusing on.
So trend trading's a good start, but everyone should explore, find what clicks for them.
Absolutely. Key is to experiment, learn from mistakes, and constantly adjust. And practice makes perfect. That's where Quotex's demo account is great.
Right. Try out strategies without real money risk.
Exactly. Your trading simulator.
Get comfortable, test your skills, see how you react under pressure. No financial risk.
Precisely. Like a safety net while learning to walk a tightrope. Experiment, mess up, learn without fear of falling.
Once you're confident, gradually move to live trading. Starting small, scaling up as you get better.
Exactly that.
Great advice. So wrapping up this part of our Quotex deep dive, I want to leave our listeners with something to think about.
Okay, sure.
What's the one piece of advice you'd give someone starting their trading journey?
I'd say embrace the learning process. Tons of resources out there. Books, articles, online courses, even communities of traders sharing ideas.
Like a whole new world to explore with its own language and rules.
You got it. The more you learn, the more comfortable you'll be.
And remember, Quotex has that demo account. Fantastic for practice without risking your money.
Absolutely. Use it.
It's like having a coach in your corner, guiding you, helping you avoid those rookie mistakes.
Exactly.
All right, so continuous learning, practicing with that demo account, and slowly increasing your risk. Great takeaways.
Yes, those are important. And maybe the most crucial advice, develop a trading plan and stick to it.
What does a trading plan involve?
It lays out your goals, how much risk you can handle, which strategies you'll use, even your emotional triggers.
Okay.
It's your map for the markets. Helps you stay disciplined, avoid those impulsive decisions.
So it's not just the technical stuff, but understanding your own psychology, too.
Exactly. Trading is mental as much as technical. Emotions can help you or hurt you big time.
Fear and greed, I bet those can really mess up your judgment.
Definitely. That's why a plan is key. It keeps you grounded, sticking to your strategy, not letting feelings control your decisions.
That voice of reason reminding you of the goal.
Yeah, that's a good way to put it. And remember, no single right way to trade. What works for one person might not for you. Got to find what suits your personality, your risk level, your goals.
Find your own rhythm in the market.
Precisely. And that takes time. Trying things out, learning from wins and losses.
Well said. So, wrapping up this deep dive into Quotex, let me leave our listeners with a final thought. What would that be?
The best trading strategy. It's the one that works for you. Put in the time, learn, practice, find what fits your style and your risk tolerance.
And remember, trading is a journey. Keep learning, stay curious, and never stop exploring. Back with the deep dive, still looking at Quotex. Kind of feels like the Wild West of trading, you know?
Fast-paced, yeah.
Yeah.
High stakes, lots of chances, but also lots of ways to trip up.
Exactly. We talked about 5 common strategies, all different ways to handle the market's moves.
Right.
But I keep thinking back to what you said about due diligence. Picking a platform is just as big a deal as picking the right strategy, huh?
Absolutely. It's like you wouldn't build a house just focusing on the furniture and ignoring the foundation.
Great point.
Solid strategy is important, but got to be on a platform you can actually trust.
Makes sense. And speaking of building, I imagine learning to trade well, that takes time.
It does. No shortcuts there. Constant process, learning, adapting, getting better. No magic formula or anything.
So for our listener who's taking all this in about Quotex, what's your advice as they start out?
First, I'd say enjoy the learning. Tons of resources out there, books, articles, you name it. Online courses, even groups of traders where you can swap ideas, learn from what others have gone through.
Like a whole new world to get into.
It is, with its own lingo and everything. The more you learn, the more confident you'll feel navigating it all.
And don't forget, Quotex has that demo account.
Right, great for practice.
Risk-free way to try things out.
Absolutely.
Like having a mentor watching over you, you know?
Yeah, helps you avoid the common newbie mistakes.
Okay, so always be learning, practice on that demo account, and slowly up your risk as you get more comfortable. Good takeaways.
For sure. And the most crucial advice, I think, have a trading plan and actually stick to it.
What's involved in a trading plan?
It lays out everything. Goals, your risk tolerance, what strategies you'll use, even what gets you emotional about trading.
Interesting.
It's your roadmap for the markets. Keeps you disciplined, prevents those impulsive moves.
So it's not just knowing the technicals, but knowing yourself, too.
Exactly. Trading is psychological just as much as it is technical. Emotions can be your best friend or your worst enemy out there.
I bet. Fear and greed, those gotta be tough to handle when money's on the line.
They are. Having a plan helps. Keeps you grounded, following your strategy, not letting emotions call the shots.
Like having that voice of reason reminding you what you're actually trying to do.
Right. Good way to put it. And, important thing to remember, no single right way to trade. What works for someone else might not work for you.
Yeah.
Find what suits you, your personality, how much risk you can stomach, what you're aiming for.
Find your own groove in the market.
Exactly. That takes time. Experimenting, learning from both the good and the bad trades.
Well said. So, wrapping up our Quotex deep dive, any final words of wisdom for our listeners?
The best strategy out there. It's the one that works for you. Put in the effort, learn, practice. Find what fits your style and risk level. That's what matters.
And remember, trading is a journey. Keep learning, stay curious, never stop exploring. Thanks for joining us on the deep dive, and happy trading, everyone.